Video opens with a rapid montage of news headlines flashing across the screen. Silver shockwave. Is $100 inevitable? Critical mineral shortage hits global supply. 2026. The year of silver? News anchors speak in urgent tones. The montage cuts to gleaming silver bars stacked high, followed by a digital chart showing a price line skyrocketing upwards, labeled 2026 projections. Scene shifts to high-tech manufacturing environments. The year is 2026, and a quiet revolution is underway, forged not in gold, but in silver. While the world's attention has often been fixated on other assets, the silent workhorse of the precious metals family is preparing for an unprecedented surge. The first catalyst is an insatiable industrial thirst. In the clean rooms of semiconductor fabs, where the digital future is etched into silicon, silver's unparalleled conductivity is indispensable. We see it in the intricate wiring of next-generation robotics that power automated factories and in the complex motherboards of our most advanced electronics. This demand isn't just about faster gadgets, it's about building the infrastructure of tomorrow. The green energy transition is pouring fuel on this fire. Vast fields of solar panels stretch towards the horizon, each one containing a fine mesh of silver paste that captures the sun's energy with unmatched efficiency. Inside the sleek chassis of electric vehicles, silver components are critical for managing high-voltage power systems and ensuring reliability. As nations race to meet ambitious climate goals, the demand for these technologies explodes, and with it, the demand for the one element they cannot do without. This isn't a speculative bubble. It is a fundamental pillar of the global shift towards a sustainable future, and silver is at its very core. Scene transitions to sophisticated trading floors and individual investors. This industrial pull creates the perfect storm for the second major driver, the investor stampede. On the trading floors of New York, London, and Shanghai, institutional investors are waking up to the reality of a profound supply-demand imbalance. Their screens glow with data, all pointing to the same conclusion: a severe and deepening global silver deficit. For years, the market has consumed more silver than has been mined, drawing down precious stockpiles. Now, those stockpiles are reaching critical lows, and the big money is beginning to make its move, seeking to secure a position before the rest of the market catches on. This institutional rush is mirrored on Main Street. A growing wave of individual investors, wary of inflation and currency devaluation, are turning to silver as a tangible store of value. We see them in coin shops and online marketplaces, purchasing silver eagles, maples, and small bars. They understand that silver is not just an industrial metal, but also a historical safe haven, real money in a world of digital promises. This dual pressure from both colossal funds and everyday citizens is creating a powerful squeeze on an already tight market, transforming a gradual trend into a potential vertical ascent. Imagery becomes more symbolic, a spinning globe with red lines indicating trade friction, a US dollar bill slowly burning at the edges, and newspaper headlines about resource nationalism. Layered on top of this are the ever-present geopolitical and economic wildcards. Global economic uncertainty, fueled by rising debt levels and inflationary pressures, is eroding confidence in traditional fiat currencies like the US dollar. As the dollar weakens, investors historically flee to hard assets, and silver stands as one of the most accessible and undervalued options. Furthermore, rising trade tensions and a new era of resource nationalism are disrupting supply chains. Nations rich in silver deposits are beginning to recognize the strategic value of their resources, potentially restricting exports to prioritize their own domestic industries. This scramble for critical minerals adds a powerful layer of scarcity, threatening to cut off supply just as demand reaches a fever pitch. Video returns to a summary montage of the key drivers: factories, solar panels, investors, and global maps. So, what happens when unstoppable industrial demand, a massive influx of investment, and a structurally deficient supply all converge in 2026? The forces are aligned for a potential price explosion of historic proportions. It's a collision of the green revolution, the tech boom, and timeless monetary principles. The industrial world needs it, investors want it, and there simply isn't enough to go around. The final shot is a single, pristine silver coin spinning slowly on a dark, reflective surface. It catches the light with each rotation before slowly wobbling to a stop. The screen fades to black as a question appears in white text. When the dust settles, what will its true value be?